Welcome to Shortview Trading. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Shortview Trading. This is your morning market hit for Monday, 29th of July. It's around 10 a.m. London time. Now, if you want to trade equity index futures, you want to trade S&P 500, NASDAQ, DAX, FTSE futures or other similar equity index futures, what factors do you need to think about? How should you go about getting engaged and putting on that long or short trade on a 1 to 2 week time frame? That's what we're going to dig into in this video. Well, what a month it's been. Very dramatic movements in equity markets and other global financial assets. There's been a tech wreck over the course of July. There's been major sector rotation within the equity market. And we've had some currencies moving quite dramatically, most notably the yen sharpening since the middle of the month. Now, the trigger for all this was what we saw on the 11th of July with the release of US inflation data, with it coming in better than expected. But the backdrop was all set up. You can see it in various models that we've been flagging up over recent weeks. Indeed, going back into late May, June, we flagged up the idea that the key leadership stock of the market, Nvidia, was massively overextended. You can see that on this chart that we've been putting up in front of you. On our overextended indicator, you've got a very rare signal late May, early June, showing that Nvidia was ready to top out. And sure enough, the topping out process started from there and got more dramatic in the second half of July. And then later in July, as we got further and closer to this 11th of July announcement, we saw a similar signal for the NASDAQ in general, the broader tech index, equally overextended to the upside in mid-July and therefore vulnerable to any tweak of news flow that might encourage money to move sharply from one place to another, which of course is exactly what happened. And then on top of that, if you looked at the yen, max short positioning, speculators very short, coming into that data point in mid-July, that CPI data point, and so therefore very vulnerable to sharp moves the other way, which is exactly what we saw. So very sharp downside in tech over the last couple of weeks. NASDAQ's off a ton, Philly Stocks is off even more. Very big moves, dramatic moves, also in the big cap, mega cap tech stocks. So the question is, what happens now? How does this play out from here? And of course, most pullbacks in markets consist of 3 waves and occasionally of 5 waves, but primarily 3 waves. An initial wave of selling, wave 1, that we've been seeing over the last couple of weeks. Then a wave 2 relief rally, whereby the market retraces some of its wave 1 losses. And then a wave 3 sell-off back to those wave 1 lows and often below the wave 1 intraday lows. So the question is, where are we in that process at the moment? And how do you play it? How do you go about timing the flip from wave 1 to 2 and then into wave 3? And of course, the answer for us is to use our market timing models, our 1 to 2 week market timing models, sometimes which we combine with our medium term 1 to 4 month market timing models to get even more powerful signals. And indeed, if you look at something like the global momentum indicator that we're putting up in front of you now, you can see it had a nice sell signal in the middle of July, earlier in July, and now it's moved back to strong buy. And it's this sort of model and other short-term market timing models like the risk appetite scoring system or RAG1 and RAG2 or other technical scoring systems or the put to call ratio. These kind of models that we like to use each and every day to give us insights to when from switch from long to short or short to long. And we publish all these each and every day in the daily risk appetite gauge publication. If you're interested in a trial, please click on the link below and we'll send you the daily risk appetite gauge for free for a bunch of weeks, or if you're a subscriber, it should be in your inbox around 8:30 a.m, 9 a.m. London time each and every business day. And then on top of all the models, we like to think about the key events that are coming out over the course of this week, how they may influence markets. Well, there's 3 key themes for this week. Firstly, central bank meetings. We've got the Bank of Japan, the Fed and the Bank of England all announcing monetary policy decisions over the course of Wednesday and Thursday this week. They'll be watched closely, especially given what the yen-dollar exchange rate's been doing. Then added to that, second key theme is a continuation of US quarterly earnings. We had some disappointment from tech earnings in the last week or so. We've got more key tech earnings this week. They'll be watched very closely. Amazon, Apple, Meta, Microsoft, and one or two others. Very critical for this market over the course of this coming 5 trading sessions. And then finally, there's a lot of key macro data, especially out of the States and bits and pieces elsewhere. Elsewhere, you've got Eurozone inflation. That's important. It'll influence the ECB going forwards. And then in the States, we've got some big data out at the back end of this week as we get into August. Non-farm payrolls on Friday, ISM manufacturing ahead of that on Thursday. So that's it from us. That's your morning market hit for Monday, 29th of July. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button, like and share on social media, or follow us on Twitter, Instagram, and or Facebook. Thank you for listening. Stay safe. Trade well.